If you've got spring fever, Lowe's has the cure. During SpringFest, make your landscape stand out with 3 free bags of Miracle-Gro 3/4 cubic foot garden soil when you buy 3. Plus, get up to 40% off select major appliances to keep clothes, food, and dishes fresh all season long. Our best lineup is here at Lowe's. Valid through 4/22 while supplies last. Selection varies by location. See Lowe's.com for details. Soil offer excludes Alaska and Hawaii.
Listen, all you New Yorkers. Taxi!
Okay, man, we're looking around.
This is the 77 WABC minicast.
Well, we got lots of positive things to talk about regarding the stock market. My goodness. It's almost a melt-up. Actually, it's been going on for a couple of weeks. Part of it, of course, is we're moving in the right direction to crush Iran. We will, before long, get rid of what I call the most gruesome regime since the Nazis of the 1930s and 40s, and do the whole world a favor. And hats off to President Trump and Prime Minister Netanyahu and their respective militaries and intelligence agencies. We've talked about that quite a bit in the show. Probably talk about it some more. But we're in the right direction. But the other point is the profit story that we were talking about earlier with John Carney. I mean, profits of the mother's milk of stocks, and I think that has a lot to do with this rally. Also, you just can't keep a good market down. Dow Jones is up 1,500 points plus. NASDAQ's up 1,500 points plus. The S&P is up 300 points. S&P is at a record high, 71.26. And I think Taylor told us last night the NASDAQ's the highest since the early 1990s, which is very cool. And the Dow's going to hit 50,000. It's 49,447. So we're cruising, and the market is quite resilient. The economy is quite resilient, and profits are quite resilient. So let's get to it. We got Jack Bouroudijian, chairman of SmartX Data, Jim Iuorio, CEO of, what is this, JI Financial Strategies? Did you rename your company? Is that?
I did, yeah. You like it?
It's wild, yeah. Branding is fantastic.
Branding, that's what I'm doing, yeah.
Absolutely terrific stuff. Just looking at this stuff, guys, before you dig in, tech led the way, surprisingly. Tech up 8%. Consumer discretionary 6.5%, telecom 6.5%. And the bottom was energy, lost 3.5%. Oil prices start coming back down. Crude oil, WTI lost $12 and closed at 84.69. So, Jim Iuorio, the aforementioned, with your new branding, how do you read this market right now?
So I'm impressed by something that I think the stock market, all the markets were relatively pragmatic through this whole thing. They were saying most of the time, okay, if there's a problem, crude oil is spiking. If it feeds into inflation, the Fed is painted in a corner. But I think something materially changed 2 weeks ago, right before the NFP number. Remember, we were all up in arms because of the markets, is because they thought the Fed couldn't ease because of the inflation high crude was causing, and the Fed couldn't tighten to handle that inflation if it wasn't temporary because the labor market was weakening. And then a couple things happened that changed the whole story. The unemployment numbers came out relatively blockbuster at 178. Now, I know some people don't 100% give credence to the government data, but it's usually directionally correct. So all of a sudden, the one of the legs of the stagflation fear was taken off the table. So the stock market started to feel a little better. And then all of a sudden, the crude story came down. And one last thing about the crude story is that there's obviously different pundits who are poisoned somehow. Like some people have been broken by Donald Trump. Some are too devoted to Donald Trump. The real story was very, very difficult to get. So the price action of crude was the only thing telling the story. On Wednesday of last week at $95, to me, that was saying 50-50 that this thing is over in 3 weeks. But crude at 85 and lower is saying it's 90-10 that it's over right now. So right now it's certainly euphoric, and I'm a bull.
Where's the year ahead futures, Jim, is about $70?
Yeah, some of them ticked below $70. But again, that can be read two ways. And yes, there's an element that the crude oil curve was saying that it was going to be a short-lived conflict. But more important than that was the short ends, panic and demand for supply. So it kind of obfuscates that signal. But embedded in that signal was that the market always thought that it was going to be short-lived. And so did I, by the way. That was always my base case.
What's the what's Jack Bouroudijian? What's the break even? The marginal cost of production, producing an extra barrel of oil, is it somewhere in the low mid 60s?
Well, it depends on who you are. If you're an Arab country, it's about 65 is what they've budgeted for all their budgets. One of the reasons that gold was going down because they were liquidating gold to make sure that they made up for some of those losses.
Oh, that's a good point. Right.
But if you're here in the Western Hemisphere, that number is a lot lower, and that is the real story with oil, Larry. Nobody's talking about the other side of this coin, which is going to be the deflationary pressure that we see on the markets when we start to see oil work its way down under 60, under 50. These are the numbers that I can see happening within a year from now. Now, as far as the stock market goes, remember, the market is immune right now, not only to the oil shock, because it's really a rounding error in the long run, especially when we're starting to see, because we all know what we're seeing on here in the U.S. We know that we are the world's largest producer. This is not the 1970s anymore. So all of that now has been factored into the equation. On top of that, we're going through the biggest CapEx boom that we've ever seen and witnessed. You're seeing data centers springing up everywhere. That is not stopping. When the market does what it did, when you see a V-shaped recovery like that, it tells you that it was mispriced. The way it acted and the way it came back tells you two things. Number one, people were underinvested at the end of that first quarter. People were sitting on a lot of cash. Number two, all right, they started to see the real story, which is that earnings are still strong.
That's it.
You're starting to see what's happening. And you were mentioning the S&P. You were mentioning the NASDAQ. The Russell made a new high. So that's key. The Russell made a new all-time high. And on top of that, and nobody's even talking about this, nat gas is back down to $2.67. All right? It spiked all the way up to $7 just about 4 or 5 weeks ago. It is now back down to where it was in 2024. And that is what drives data centers.
Well, so oil is getting cheaper, gas is getting cheaper, but profits are the mother's milk of stocks. The early profit numbers coming in for Q1 are very big. Taylor Riggs, from Fox Business Network was on the show last night. I think she said the first 10%, 12% of companies reporting profits are up 30%. That's a big number. The GDP profits, national income profits are up 10% year on year at the end of last year. I know that's a lagging indicator, but there's a lot of evidence. And if profits are doing well, the stock market and the economy will be resilient. I just want to make that point. Everybody looks at, this is aimed at Jim Iuorio because I know he reads the news.
I hate being one of three guys who are all this positive. I'm about to change my tune to negative.
I know you read the newspapers a lot, and it worries me because you pick up bad habits. But the fact of the matter is, it is profits that drive stocks, and it is profits that drive the whole economy. That's all. If there's no profits, you're going to shrink your business. You're going to lay off workers. Incomes will come down. Families can't spend. But you're looking at a boom in profits. And that's just so darn important. And we're going to wipe these Iranian malls off the face of the earth, whether it's this week or next week or 3 weeks or whatever. We've already established that. But it's more fun to look at and the other thing is, the impact of the tax cuts. Look, this stuff really started kicking in, right? April 15th.
You're taking all my stuff
I'm
away.
Sorry.
I was about to mention.
Go ahead. Well, you rebranded your company. I wanted to make sure.
Do I sound smarter since I
much
rebranded?
better.
I think I do.
A whole lot better.
So at the beginning of this year, I was very bullish to the economy. I think that the average tax refund for people is about 12%, and that's not even the biggest deal. I thought the expensing issue was going to be a massive tailwind to the economy, as was the deregulation effort, as was reinvestment. And again, we've all known Donald Trump, and he's been in the spotlight for a long time. He is prone to a bit of exaggeration. If he says that $25 trillion has been recommitted to investment in the United States, and let's say that it's only 6 or 7,
call it 10, still, right? That's big.
That's what I'm saying. It's still a significant amount.
Right.
So people are like, "Oh, he's crazy." Well, I don't care what number he throws out. I care what the real story is, and the real story is good. Now, it was obvious that Kudlow could have thrown us into a bit of a tizzy, and now I will mention this too. And again, I'm just joking about being three, positive guys, but I will say there's one thing that it's very slight concern. Crude at 83 to 85 is still pricing in a risk premium. There's no question about that. So it's saying that we are pretty sure that things are going to go good. And again, we could get a curveball from there, but I don't believe we will. That is not my base case. I'd like to see the stock market come back.
Well, there'll be ups. You're right. Yeah. Look, this story will have its ups and downs in the weeks ahead, but we're coming down the home stretch. One thing I want to ask before we take a break, Jack Bouroudijian, the yield curve is upward sloping. I got T-bills at 368. I got 2 years at 370. All right, that's kind of flat. 5 years at 584, and 10 years at 424, and then 30 years at 488. And that's okay. I don't see that. I mean, I don't know why the Federal Reserve has to do anything right now. I guess that's what I'm like. The market doesn't need it. The economy doesn't need it. We got controversy over the Fed head anyway. But why not? Rates are what they are.
Well, I think the Fed right now has got the handcuffs on between what's happening with, in Iran. But more importantly, Larry, I think you're wrong. And I'm going to just say that. I'd never say that, but I'm going to say it this time.
Terrible.
You know what? I think that we're seeing that yield curve way too flat, right? Especially the front end of that yield curve. It's telling us that the Fed is too tight, all right? It's one of the reasons why we should see a little bit more of a curve in the yield curve. That's why they call it a curve, all right? Right now, you're not getting paid for any difference between 3 months and 2 years. That is ridiculous. That is absolutely ridiculous. And I'll defer to Jim on this, whenever he can talk about it. But to me, that is a clear statement that the Fed has got room to move on the short end.
Yeah, but I don't want them. Here's the thing, though. Even though oil prices come down, you're still $85. So I don't want the Fed pumping money supply into the economy right now. In other words, wait.
It's not a question of pumping money. It's a question of what the real rate is, Larry. What's the real market rate without it being manipulated? And that right now, the yield curve is telling you that the real rate on the short end should be lower.
I'm not convinced of that. I don't know. The actual, I hear, growing up in the 70s, the Fed would start cutting rates and increasing the money supply when oil prices went up. And oil inflation became generalized inflation. I want to avoid that this time around. And they've done a good job. I think I give them credit. They've done a good job. This is not the time to move. The curve's not inverted. You're right, it's flat at the short end. I agree. But nonetheless, by the way, bond rates, everything came down. Let's see, 2-year note down 10, 5-year note down 10, 10-year note down 7. How low can rates go? How low can the 10-year go?
I think the 10-year could get down. Well, I'll give you my answer first. I think it can get down under 4%.
Really?
I don't know what Jimmy thinks, and I think it's because people are buying everything that is U.S. dollar denominated, and you can see it across the board.
So much supply too, though, Jack. That's the part that worries me too. When yields shot up to 4.44 after the war broke out, to me it wasn't about inflation. It was about just the amount of bonds that need to be sold to cover our debt, adding on the war part of it. Now, the war part of it's gone, but that still leaves us with, 11 or 12 trillion bonds, with the 9 trillion we have to roll over and the 2 trillion to satisfy the deficits. There's a lot of bonds to be sold. So I think 410 is reasonable on the downside. And I think 470, if we ever get to 475 on the upside, that's when the Fed comes back and starts buying, which I think is a terrible move.
Terrible.
I bet they do.
Debt is as American as apple pie. We are talking to Jack Bouroudijian of SmartX Data and Jim Iuorio of JI Financial Services. I'm Kudlow. We'll be right back. And we're talking profits and we're talking interest rates, but most of all, we're talking fabulous couple of weeks of stocks, really record-breaking weeks. It's good for the animal spirits. A lot of people own stocks one way or another. Maybe as many as 140, 150 million Americans, depending on which survey you look at. We are talking to two great friends of mine, Jack Bouroudijian of SmartX Data and Jim Iuorio, the CEO of JI Financial Strategies. So where from here? I mean, you can't bet against it, can you, Jim?
No, I'm not. I'm definitely not buying against it. I think with the magnitude of the move we've seen over the last week, I do think it pulls back for a better spot for me to buy it, but I'm definitely a bull. I'd like to see it come back below those old highs, gather some steam and then shoot higher. To me, from a technical analysis standpoint, again, and people listening think that technical analysis is just voodoo lines on a chart, but to me, it's sentiment and momentum. And if it comes back a little bit, I'll probably get in by it. I'm looking at copper, I'm looking at gold, I'm looking at the XLF, the financials. So I think those all could be not tech. Tech just moves so far, so fast. I feel like I missed that rocket ship on this particular move.
What's Dr. Copper doing? It's pretty, let's see, Dr. Copper year to date is up 6%. 52-week change is up 24%. And CRB year to date is up 21%. Now, I know a lot of that's oil, and it's up 22%. But the commodities, Jack Bouroudijian, what are they doing?
They're under control, Larry. You know what? If it wasn't for oil, we wouldn't even be talking about any inflationary pressure right now. You know, if you look at the grains, if you look at everything else, you know, they're all under control. It's one of the reasons why I've got a feeling this year is going to surprise some people. I think what we've experienced over the course of these last 2 weeks might be indicative of what we see over the course of the next few months. And, you know, it's almost going to be a replay of last year. If you remember last April, we were on the show together and people were talking doomsday scenarios again. You know what? The Trump tariffs are going to drive this market to zero. All right. And what happened? We rallied 40%. Well, guess what? We just saw another 10% break, 9% or so in the S&P. I would not be surprised to see us back around the 83 to 8,500 level by the end of the year when we're talking. And that is something that will catch a lot of people flat-footed.
Boy, the Kudlow Trust will love that. I'm loaded up at the index. I never sell it. I only buy it. I think it's fabulous. You know, it's a great country, fellas. I mean, honestly. And the policies are very pro-growth. They're not redistribution. They're not big government socialism. They're not perfect either. I get that. But the thrust of the policies are what? Tax cuts, deregulation, drill baby drill, reciprocal fair trade. You know, it's a pretty good story. I know Mr. Trump's critics will never acknowledge that, but it's a pretty damn good story. Isn't that what the stock market's telling you, fellas? I mean, really?
Well, it's actually a page out of Milton Friedman's book. It's the twin miracle, the economic and political miracle simultaneously, and we're starting to see it play out in real time.
And it's catching on.
I agree with everything you said. You know, I want to find fault in everything.
Well, it's just, you know, look, it's improving in South America. It's improving in Latin America. Who knows? It may improve in the Middle East, too, if we're lucky and blessed about it. You two are terrific. Thank you ever so much, Jack Bouroudijian and Jim Iuorio. Folks, we will take a quick break and then do some money in politics. Steve Forbes and ace pollster John McLaughlin. I'm Kudlow. Please stick around.